ISA or pension, where should you invest first? Most people in the UK are saving in the wrong place, so in this video I'll talk through the best place to save your money first. Hi, I'm Ross Jenkins, Finance Director and Investor, and in these videos I make money simple for you. Today, a really common question that gets asked a lot: should you invest in your ISA or should you invest in your pension? And there's really one simple method that you should always do first. So let's get into it. An ISA is just a tax wrapper, so you can put in £100 and it stays £100. So in the UK, you can invest up to £20,000 a year, which is soon to change to £12,000 a year if you only do cash. So within an ISA, you could either invest in a stocks and shares ISA, or you can just invest in a cash ISA. So within your ISA, the cash can grow at different rates, but your £100 invested will always be £100 unless the investment goes down. And the good news about an ISA is you can take it out at any point whenever you want to. There's no rules against it, apart from you can only invest a maximum of £12,000 or £20,000 per year. So let's look at what a pension is. So a pension is also a tax wrapper, but it works in a different way. So with a pension, your government will give you tax-free money on what you invest into your pension. You also might get free money from your employer, who will match some of your pension contribution. So this means your money grows tax-free, but the bad news is you can only access it, depending on your age, from either 55 or 57 in the UK. So when you reach age 55 or 57 in the UK, you can withdraw 25% of it tax-free, which is £268,275. The rest of your income from your pension will be taxed as your normal income in the UK based on whichever bracket you fall into in the tax bands. So I cover using pensions in my next video, avoiding the 60% tax trap. So, which method should you use first? So there's only one simple rule to this: always invest in your pension first. Your employer is always going to match this, so always invest up to the minimum that you need to get your employer's match contribution. So for example, if you invest 5% and your employer gives you 5%, that's 100% return with only putting in 5%, which is an amazing return, and you can't beat this investment anywhere else. So then what do you do after you've matched your employer contribution? Well, this depends on your goals for life. Are you saving up for a house deposit or a car or a certain holiday? In which case you probably want to invest in your ISA. But if you're looking for the long term and get into a comfortable retirement, then you want to invest in your pension. So it all depends on what stage of life you are and where you want to get to. But if you look at for future videos, I discuss the 50-30-20 rule and how I invest my money. So I've always got a goal for my retirement when I get there. So let's talk through some examples. So if you invest £100 into your pension, your government will give you tax relief, which will automatically put you up to £125 invested if you're a basic rate taxpayer. If you're a higher rate taxpayer, this could be as much as £167 if you do it via salary sacrifice, as you get the higher tax band refunded as well. So this is a huge extra boost to your savings via your pension. So if you put £100 into an ISA, it's just worth £100. But the good news is that when you come to withdraw it, there's no tax to pay, unlike a pension. So as you can see, there's two different tools depending on what your goals are in life. So I like to do a mixture of both ISA and pension saving, which I will discuss in how I invest my money in future videos. So my simple summary for this video is I would do both. I would invest in your pension, doing the employer match contribution, and then I would do a mixture of ISA and pension depending on your goals. So pension can also be very beneficial if you're trying to stay in certain tax brackets and avoid paying the extra tax, in which case then the pension becomes very beneficial. But an ISA is also good because it gives you the flexibility if you need to get hold of your cash earlier than the age of 55 or 57. If you want simple UK finance videos every week, please hit the subscribe button and like this video. And please let me know in the comments below what you do between investing in your pension or ISAs. See you next time on Money and Life with Ross.